The US economy is absolutely crumbling at the moment, guys. Very, very sad to see. Not very unexpected, however. Obviously, global coronavirus pandemic, lockdowns all over the world, not just in the US, and it's taken a devastating toll on the US and the global economy. And the data is just not looking good. We're starting to get some of these key data points dripping through that are showing us the true extent of the damage of these lockdowns. So this week in the US, quite a key week for data. So on Wednesday, it was GDP data. In the first quarter of 2020, the US economy shrunk at a rate of 4.8%. At a quarterly rate of 4.8%, so very, very sharp contraction there. And the lockdowns only started at the end of March, really, or midway through March. So Q2 is going to be even worse. We also had another week of initial jobless claims data, and basically in the last 6 weeks, 30 million Americans have had to file for unemployment claims for the first time. So devastating toll there on the US labour market. And just now, we had the ISM manufacturing PMI, which is basically a business survey of the manufacturing sector for April. That was very bad as well. Although that date is a little bit weird because it's been being propped up by longer delivery times, which in normal times, longer delivery is a good sign because it shows that you've got high demand and it's taking you a little bit longer to fulfill all your orders. But in bad times, like now, it means that basically global supply chains are getting disrupted. So the headline was a little bit better than expected today in ISM manufacturing PMI, but the sub-indices were shocking. Employment, record lows. New orders, pretty much record lows. And that is representative of that terrible GDP data we saw and the terrible jobs data we saw. What does this mean for markets, guys? Well, as I said at the beginning, this data at this point hasn't really been moving markets recently. So going forward, I think we're probably not going to see data move markets as much as we have since this crisis began. That's because we've got to this point now where investors and financial market people, we all know that we're in a massive, unprecedented, record-breaking recession. We know it. What everybody's focused on now is the recovery. And there are some really key uncertainties, really, that will determine how this recovery goes. For one thing, can we get a drug that can treat coronavirus well and bring down the death rate and all those kind of things? Like remdesivir potentially could, hopefully it can. That's why we've seen markets so sensitive to remdesivir headlines recently. Another thing we're sensitive to, schedules to reopen the lockdown. So obviously markets just want to see the economy back to normal. Markets don't really care about the death rate, to be honest. They just want to see people back to work so that businesses can make money. So the more quickly governments let people go back to work, the better it's going to be for markets. And now this other theme that's come up, renewed US-China trade tensions. So guys, those are the things that markets are focused on at the moment. That is pretty much it from me for now, and I'll see you in the next one.